everybody, and happy Thursday to everybody out there. Today, we are going to do an educational segment. So let's get right up to it. Welcome to Web3 Weekly. I am Crypto Kenny. I am here to give you all the latest market updates, interviews, and educational material possible. Last week, we had a market update with several of the management team in Alpha Mutants, and I believe we went over a lot of really great material last week. Really good time. I think I'm hoping that it helped quite a few people. So this week we're going to change the tune a little bit. I want to do an educational video here that I think is very imperative and very useful during especially these volatile markets that we're currently in. So we're going to talk a little bit about designing an investment portfolio. We're going to talk about different types of portfolios. We're going to talk about coin picks during this time, and hopefully get some education in there for some of you. So we're doing some screen sharing today. We've got some charts and stuff up that I've done, and hopefully that'll get you guys will be able to do some learning. Get your pen and paper out or your phone notepad or something. Take some notes. So if you did not see last week's episode, it will be right here on a link. Very strongly suggest you watch it. A lot of good information. You'll also see down below our links to the Alpha Mutants Twitter and our Discord. Come in. We've got a lot of new utility tools that are being brought up this week that I think you guys will really enjoy. We're coming up to a little bit over a month or so from the launch time. So definitely drop in there and say hello. And we will get you on there. So today we are going to talk about portfolio creation, portfolio management. We're going to talk about levels of exposure. We're going to talk about my personal picks for top altcoins in the high market caps, mid market caps, low market caps. Okay. So to get started, I'm going to do a real quick screen share with you guys to this first document. So here we go. All right. So as you can see here, document's titled Getting Started with Your Crypto Portfolio. So we want to talk about a few things first. So before we can really talk about what to do with your portfolio and how to manage it, we need to talk about what needs to be done prior. I think a lot of people spend a lot of time telling you how to create your portfolio, and I don't think that that's the right way to do things. I think there's a lot of prior work, a lot of pre-workout, so to say, that you need to do before looking at investing and what to invest in and what percentages. So let's talk about that real quick. Also, I hope you guys like my newest PFP. I've been dropping some teaser art here from the upcoming collection. None of it is final product yet, but just throwing some teasers up each episode so you guys can kind of check that stuff out. So let's start at the top. So personal education. I personally advise coming into the space. We see a lot of people jumping in on FOMO waves, and we see a lot of people jumping in on hype. And in the bear market, that's going to be a lot less. So I think it's time that we started talking about what you should do before jumping into the space. So now's a great time to do these items. So personal education, at least 100 hours of study. If you have not spent at least 100 hours in study of blockchain technology, Bitcoin, NFTs, DeFi, just understanding how the system works, different blockchains and what makes them different from each other, scalability, speeds, these type of things. If you haven't had study in those areas, if you don't have a basic understanding of blockchain tech and how blockchain tech is developing, then you shouldn't be investing. One of the number one rules of investing is know what you're investing in. Become an expert in what you invest in. It's a rule that has been followed by many of the great investors in the last 100 years that they have really dived into their particular investment fields and become experts in those fields, and that really helps in the long run. And the biggest thing it does is it allows you uh, to have a measure of understanding in the space, and so it allows you to forego a bunch of mistakes. You won't make beginner investment mistakes if you have a base knowledge to come into. So that's number one. Number two is after you have put in that 100 hours, and me personally, I would even suggest more than that. I would suggest, probably double that before you actually jump in. You have plenty of time. We're in a bear market. So I would particularly suggest that, but at least 100 hours. Number two, safety. Understanding self-custody, hot and cold storage wallets. So before you even start to come into the space and think about investing, you need to understand safety. So understanding safety is understanding the difference between allowing custody of your funds through an entity and having self-custody. So a very simple explanation of that is when you come in, a lot of newcomers in the space will come onto an exchange, like Coinbase, Crypto.com, Binance, FTX. All of these are custodial spaces, right? Or custodial projects. So when you come on and for example, I come on and I've decided that I want to invest, $200 a month into Bitcoin. I can come on to Binance or FTX or, Coinbase, and I can purchase that $200 worth of Bitcoin with my checking account, wire transfer, debit or credit card. If I leave those funds inside of that exchange, I do not hold custody to those funds. This is what's called a custodial wallet. So inside of these exchanges, you will have wallets where you can custody your funds, but the custody is on the exchange itself. Now, self-custody refers to the only access to the wallet is through your personal access. So you're the only one that has the personal access. So this would be, most famously wallets like MetaMask. There are other great ones out there. Trust Wallet. Maybe we'll do a talk about some different wallets and the pros and cons one day. But so we have MetaMask, Trust Wallet. If you go into different chains like Solana, Phantom's very popular, those type of things. But those wallets are what's called personal custody wallets. Okay, so that means that you will generate a seed phrase upon creation of those wallets, and access to those wallets will only be available to the person that holds that seed phrase. So, in that scenario, you still have to go into exchanges to purchase initial crypto. But as soon as I purchase that $200 of Bitcoin that I'm doing each month, I can move that to a custodial wallet, a personal custodial wallet, and then I'm the only one that controls what happens to that. Okay, so that's the difference between custody or custodial wallets and self-custody wallets. Now, we also want to understand the difference between hot and cold storage wallets. So when we refer to a hot wallet, we refer to any wallet that is actively connected to the network. So if it's on your computer, if it is, if you're using it to, connect daily, if it is your web browser, your MetaMask extension web browser, if you're using it on your phone, your Trust Wallet app on your phone, all of these things, these are considered hot wallets because they are actively on a network. Now, you have to have a hot wallet in most cases to interact with a lot of protocols. So they do have their place. When we refer to a cold storage wallet, we refer to a wallet that is disconnected from the network. So, I'm sure many of you have seen, nano custodial wallets, the nano ledgers, and currently there's 6 or 7 different brands of these little USB looking drives that are cold storage. So they can be unplugged from the network, so they become much safer in terms of you can't be hacked from a wallet that is disconnected from the network. So they become much safer in how you can store them. Talking about education. So what we want to understand is after we've been educated on, the space itself, and we understand the differences between with different levels of custody and hot and cold storage wallets, we want to set up a streamline, a web of entry and exit into the space, and understand how we're going to use those. So, for example, I have done articles 1 and 2 of this list. So I've done my research. I understand the custody, hot and cold storage. So what I've decided to do is I've chosen crypto.com as my entry into the space. So I am purchasing my crypto on that exchange. Then I am transferring that crypto into my wallets. Now I will have an active hot wallet, which is my MetaMask browser. This is the wallet that I'm going to use to interact with DeFi. This is the wallet I'm going to use to purchase NFTs with. And then I have my cold storage wallet, which is what I'm going to use for my long-term hold. So in the case of this Bitcoin, I say that my time horizon for holding this Bitcoin is 5 to 10 years. So since I'm not going to be interacting with the space, once I purchase one crypto.com, I'm going to send this Bitcoin to my cold storage wallet for safekeeping. Now, say at the same time, I'm also purchasing $200 of Ethereum each month. And with that Ethereum, I want to invest in NFTs or try to flip NFTs or use them to mint whitelist. So that Ethereum I will send to my hot wallet as I am trying to interact with that. I'm going to be actively using those funds. Okay, so these are the differences that we need to think about. Now, next on our list, we want to create a thesis. What is your long-term vision for Web3? This is very important. Okay, very, very important. A thesis is an idea that you have studied and a vision that you see of the space in the future. So if you don't have a positive thesis towards the space, then you shouldn't be investing anyway. But if you do, you need to have a thesis that is distinctive to you. So for example, your thesis could be that Bitcoin is going to, in a 10 years time frame, become the world reserve currency, right? A reserve store of value for the world's currency. If that is your belief, that helps shape the way that you invest in the space. So whether you believe that Web3 is going to be the proving ground for gaming or the next level of social networks or whatever it is, you need to have a thesis as to where you think the Web3 technology is going. And this will help us to develop our portfolios. Okay. You'll see here, number 4, long and short-term investing. We need to understand the difference. Very important topic to understand the difference between long and short-term investing. Okay. There is money to be made in this space, and there are investments to be made in the space in a long and short-term basis. Okay. You have to understand and define what type of investor you are. And maybe you're a little of both, or maybe you just focus on one. I have many contacts throughout the space and some that they're strictly long-term investors. They see a 10-year time horizon and that's what they're aiming for. And then I have, some friends that in the space that look for those quicker gains, right? Whether it be within, days, weeks, or months, it's a shorter term time frame, right? Now, in bear markets, it is much more difficult to be a short-term trader because we don't see as much movement to the upside, and it's much more difficult to time shorts and to time declines than it is to time an upward movement in a bear market. But there are times for each of these styles. So long-term trading is a trading thesis that is based off of fundamentals of a project. So fundamentally, I believe that Bitcoin has value like no other reserve asset, and that value is going to grow exponentially over time. And so the thesis is to buy and hold Bitcoin. Okay. That's a long-term investment. I have, a 5 to 10 year time horizon on this thesis. Now, in short-term trading, there are areas in the space, and two of them are that I'll bring up here. Number 1 is NFTs. NFTs can be a short-term investment horizon. If you get on a whitelist, And with a popular project, you can mint and oftentimes, sell within hours or days or weeks and make a decent profit. There are also long-term opportunities in investing in NFTs. So I don't want to give you the idea that they're only um, short-term investments, but that's just an example. Also, airdrops are very popular. Oftentimes, you can invest a very small amount of money to do some bridging to different chains, to use some DeFi to do those type of things, and be allocated airdrops, which is an investment. You are investing your time and a small amount of money in order to potentially get a large allocation of funds. The most recent example of this would be the Optimism and Hop Protocol airdrops. During these, we announced these months in advance in Alpha Mutants, and the cost of doing these was a few dollars. You had to pay transaction fees, do a bridge. So at the most maybe $10-15 that you did on these, and I believe the average airdrop for the Optimism airdrop was about, if you sold during the time of airdrop, a few $1,000s, between $2,000 and $4,000 on average, and the Hop Protocol drop was a few hundred, $400 or $500. So, very small investment, very large, ROI on that investment, if you know what you're doing, but a very short-term investment, right? So, understanding long and short-term investing. Number 5, design a portfolio, how to create an investment strategy that works for you. So this is immensely important. So we have to understand that each individual investor is unique unto themselves. There are investors that have, a in real life job, plus multiple streams of income. And the way that they can design their portfolio is different from a person that might have no other investments and a smaller in real life stream of income. Okay, so everyone is different, and we have to design the investments. But does that mean that there are people that cannot invest? Absolutely not. You can always invest something. There is always something to be invested. I have never met a person, no matter what their situation, that we could not design an investment thesis for them. So this is something we're going to talk about. And we'll do a couple examples for different people here shortly. Number 6, be steadfast. Don't deviate from your plan. This is something we preach in droves at Alpha Mutants, that you have to have a plan. And once you have a plan, you do not deviate from the plan. No matter the fear, no matter the elation, no matter the FOMO, no matter the FUD, we do not deviate from the plan that we have set down. If we have a percentage that we hit, and that is part of our plan to sell off a percentage of our portfolio, we do that. If we have percentages that we are allocating to different markets, and one market is really hot, we do not change our plan of attack. It is something that we stick to. It is discipline, and discipline in the space is what makes you rich. So we do not deviate from the plans that we set up. All right, moving forward. Have an exit strategy. Know when to get out. Now, some people will say that from a long-term investor, I don't need an exit strategy. Absolutely incorrect. Every investor, no matter how long-term, has to have an exit strategy. Okay? Whether that exit strategy is your death and the movement of your assets onto your children or grandchildren or whoever that may be, that is still an exit strategy. Okay? There has to be a defined idea of what you're doing. So let me give you 2 examples. One investor may be heavily invested in the NFT market, and 75% to 80% of what they do in that market is short term. So their investment strategy is to get in whitelists or do sniping purchases on OpenSea and LooksRare and other platforms, and to sell at, say, a 50% increase, and that is their sell mark. So they take their profits very liberally, and perhaps they have a plan that says, once I take my profits for each trade, I put 50% of that back into my trading portfolio so I could do more and more trades, and 50% of that goes into a long-term portfolio of Bitcoin and ETH, right? So that's a particular plan. You could have another investor that does no short-term trading. Their investment thesis is 5 to 10 years out, and they invest in, say, blue chip NFTs at maybe a 10% clip of their portfolio, and they invest 90% into Bitcoin, Ethereum, and maybe one or two other altcoins, and they have a 10-year time horizon. They still need to have an exit strategy. So at that 10-year time horizon, say that their portfolio has a 17x at that time. During that time frame, they have to have a percentage at that 10-year mark or that time horizon, or not even necessarily at the 10-year mark, but at a certain valuation of their portfolio, they have to have a exit strategy of some portion. Because if you make unrealized money, it means nothing until it's realized, right? So we have to have a strategy to take profits always. And I'm going to give you a few examples of potential strategies for yourself. All right, so let's go back to, let's exit the screen share here. All right, so we are currently, we've currently went over the steps to this particular process of becoming an investor in the space. So now we're going to look at a couple other things, which are going to be quite interesting, and I hope you guys can appreciate some of this. So I'm going to give you some examples of portfolios and how you can structure your portfolio. So when I'm talking about this as a disclaimer, none of this is financial advice. These are examples that I've used in the past or that I have gotten off of other investors and tweaked a little bit. This is not to say that these are the be-all, end-all portfolio management. You can create a portfolio that is unique to you, and that's the whole point of this process, is to find a strategy that works well with you. So that being said, I'm going to show you some examples, and you can take take the what you can get out of each of these examples. So we'll do another screen share here. We're going to share our whiteboard here. Actually, one moment. Let's pull up the, we need to actually pull up the whiteboard from here. Just a moment, guys, to get this stuff pulled up. So I'm hoping that what we can do with this, long term, is to really create a group of investors that are so well informed in the space that they understand exactly how to do well, in any market. And that's the problems that we currently have, is that, a lot of people don't understand how to do well in different types of markets, right? So let's do here. All right. Okay, well, I'm having some issues, guys. I think I might have not saved what I had up earlier. That's okay. I can pull up another one here shortly. There we go. There we go. I think I've got it now. Okay. So here we are. So let's talk about some simple strategies here on what we're looking at in the space. This is looking a little bit weird. I think my pulled off. We'll run through it. So we're first going to look at a conservative portfolio, and a conservative portfolio is very simple in this space. Okay. if you've done your study in the space, we know that Bitcoin dominance in the space is a large portion of the space. It deviates over time, but especially in bear markets becomes the majority of the space. So in a conservative portfolio, we want to allocate around 50% to BTC, right? And if you don't believe in BTC, you don't really believe in crypto, right? It is the cornerstone, it's what created everything. Around 40% in Ethereum, we see right here. And then we also see around 10% in top altcoins. Top altcoins. That means altcoins within the top 25 in ranking. Okay. This is going to be your conservative portfolio. During a bear market, even a conservative portfolio can easily, within a 5-year time frame, return a 10x very easily, right? So you can see potentially here, and this is based off of market information from previous bull markets, from the lows to the additional market highs during the next cycle. So we can see a 10x here very easily on a conservative portfolio. Then we'll go to what I call a balanced portfolio. A balanced portfolio is still based off of 50% Bitcoin, because this lessens the volatility even in times of high volatility, because Bitcoin, besides for the initial drops into bear markets and the initial movements out into bull markets, remains relatively stable compared to the rest of the market. So we use this as a stabilizer in our portfolios. Then we'll see a lesser allocation to ETH of 25% here, a 15% allocation to top altcoins, which would be altcoins in the top 25, and a 10% allocation to mid to low cap altcoins. Okay. Mid cap altcoins being under $1 billion valuation down to about 100 million, and low caps being anything under $100 million market cap. Okay. This type of portfolio from the base of a bull market, you can normally see something more in the ballparks of, if your picks in the mid and low caps are good picks, you can normally see something in the realm of a 20x or so based off of previous markets, okay, into the next bull market. Then we go into an aggressive portfolio. So an aggressive portfolio is going to be allocated 25% to Bitcoin. Bitcoin and Ethereum will always be present in these portfolios because they are the stabilizers, and you have to have blue chips in your portfolio to stabilize the risk, right? We see 25% to Ethereum. We see 25% to top altcoins within the top 25, and then 25% dedicated to mid and low cap altcoins. Okay. So mid and low cap altcoins. This is the type of portfolio that if your picks are done well, you can easily see a 50x or more. Now, the risk to reward ratios in these portfolios become different at different times, but the intrinsic risk is least on conservative and most on aggressive. So what type of person uses these type of portfolios? So if you are a person that has a substantial amount of capital to put into the markets, you're normally going to do something around the conservative to balanced. If you are a person that has limited capital but is trying to really hit a win in these markets, you will go more with the more towards the balance to the aggressive. Okay. Now, there's a caveat to this. Very simple. Read this with me. Do not invest more than you can afford to lose, ever. This is where having the thesis and having a plan comes into motion, because we want to have funds to invest that we can afford to invest, and we want to have funds to invest that we can afford to lose. This is speculation. We are talking about very early markets here, and very high volatility at times. So these do not these do nots are very important. Do not mortgage your house. Do not take out loans. Do not use leverage. These are the do nots of crypto. Okay. So here we have this. So let's close the whiteboard here. So now we've looked into portfolio management, and portfolios are very fluid. Portfolios can be vastly different between different situations. The person that has $1 million to invest and is making $150,000 a year, his portfolio will be vastly different from the portfolio of someone that is making $30,000 a year and only has $1,000 to invest in the beginning, right? And that person's portfolio will be vastly different from the person that has nothing to invest right now, but makes $45,000 a year and wants to invest. So we have to take all these into consideration. Now, if you're looking to structure and you don't know exactly how it's done, or you're just not a person that's good with putting on paper a structure to follow, we do offer in the Alpha Mutants Discord the management team to get on a VC call with you and help you set up a portfolio based off of some information we'll get off of you. That is something that we like to do to help out a community. So once again, if that's something that you're looking to do, you can go into the Alpha Mutants Discord. You can ping myself, Crypto Kenny. You can ping Nate and Tate in there. You can ping Darkstar X in there. There's several of us that you can ping link, and we will help you out with that, or we will get you with someone that can help you out with that. All right, moving forward. So you might ask yourself, well, Kenneth, you told us to allocate Bitcoin and Ethereum to our portfolios in different amounts. But when you say altcoins and when you say large, mid, and small cap altcoins, what are you talking about? So let's give you these definitions. So a large cap altcoin is an altcoin in the top 25. A mid cap altcoin is an altcoin with a valuation or a market cap of less than $1 billion, but more than 100,000. And a small cap is anything under 100 million. So small caps 100 billion or lower, mid caps 100 million to 1 billion, and large caps in the top 25. And those will more likely than not always have over $1 billion valuations. So that's just my definition. There's several different definitions, but that's a pretty close definition to what most people will tell you. So it's a good one to start with. So now let's look at some of my top picks for altcoins in different areas. All right, guys, so here we go. So let's look at my top large cap altcoin picks. So in the portion of your portfolio that you designate to large cap altcoins, top altcoins, these would be my suggestions, not financial advice. Do your own research. But these are some that I'm currently looking at to create bags, to create positions in during this market downturn. So we have BNB, Binance Smart Chain. And I'm going to give you a small reason for each of these as we go down through. It's going to be very quick. This is going to be a shorter episode just to get through some of this stuff. I had kind of a busy week here with some stuff we're doing with the launch. But so BNB, Binance Smart Chain. Binance has proven itself, even in this downturn, to be very, very stable. They are continuing to build. They are continuing to not show any signs of weakness. They have actually taken less of a hit than most of the rest of the top altcoin market, which makes them less of an upside, but a very strong, safer bet in large cap altcoins. It's Cardano, and these are in no particular order, guys. In fact, I would probably put these in a different order if I was going up, but these are just top picks, no particular order. So ADA, Cardano, So Cardano, is normal with Cardano, is very slow in its development, but they really put out a solid product. And as the development moves forward, I think we start seeing a lot more use case and a lot more stability in Cardano. They do not have a lot of the issues a lot of these other blockchains have because of the time frames that it's been taken to really work on issues in the network. So I think that Cardano has a very bright future and is very investable. They also have had much less of a downturn than a lot less of the market. Next, Solana. Solana has in recent times really solidified itself as the second blockchain for NFTs, and it's actually making a run at some Ethereum NFTs currently. I think that the NFT use case and I think the development of games on Solana is going to definitely see appreciation in the value of the coin currently. Now, Solana does have its problems, still technically in a beta state. There are still some issues with stability of the network, but we have to understand that we're in very early days in a lot of these chains. So I think Solana is a top contender. AVAX. Avalanche does not have as near the traffic as some of the other chains, some of the other layer ones. Avalanche is a very smooth experience. Though anyone that's ever used Avalanche that has used it for gaming or DeFi will tell you very smooth experience, very cheap transaction fees. It's a beautiful chain, and with the proper development, could see immense appreciation over the next 5-year time frame. FTT, which is the FTX exchange token. FTX, like Binance, has proven itself to be very, very stable during this downturn. They've even issued some loans to other crypto projects to stabilize themselves during this downturn, which is just proves the amount of funding they have available. So they're very, very strong. I think that FTX has nothing but growth in the future. I think they're going to be a powerhouse in the space and really give Binance a run for their money. So I think it's a very safe top altcoin bet. Chainlink. I'm always preaching the value of Chainlink and the importance of Chainlink in the space. Chainlink is an oracle, which means that it brings information into closed chains from outside sources. It's used in almost everything. It has to be used in any type of protocol that needs outside information brought in. So it's used immensely in gaming. It's used in DeFi. It's used in swaps and dexes. Many things. So it's an integral part of the of blockchain technology. It's the leading protocol in the space, and they're integrated with almost everything in the space. So very, very interesting and good long-term bet, in my opinion. Also, we have Matic, layer 2 solutions for Ethereum, probably the third most popular NFT chain. So it's very popular with NFT gaming as it's easy to transact microtransactions on Matic without breaking the bank. They are growing. They have a lot of gaming in the space. They're working on a lot more in NFTs and DeFi. I just see tons of growth with Polygon Matic in the future. So that would be my 7th top pick. Mid caps. Mid caps are going to be from 1 billion down to 100 million in value in market cap. And these are some of my favorites. Now, there are many others on here, guys. And I try to give a diverse portfolio, but I want to give the ones that I feel have a real chance because if you are of the same mindset as myself and many others in the space, is that a lot of these protocols are going to end up going to nothing. So I'm really giving you ones that I see real potential in. So we'll talk about AAVE. AAVE is a yield protocol, and they're integrated with so much in the space. They're an OG in the space. They continue to innovate and be used by a lot of big players in the space. I think the technology there is simple, easy to use, and needed in the space. So I think a long-term bet, AAVE is a great one to put your money on. Phantom. So Phantom is a much smaller blockchain play. It is not nearly as developed as some of the other ones, Binance, Solana, even Avalanche. But Phantom is an amazing experience as a blockchain. The technology there is seamless. They have some of the lowest transactions, super fast times to complete transactions. Their swaps and dexes work fantastic. It's just a really good experience if you've used Phantom, and I believe that they have a real potential to super high upside. Very very solid, I think, mid cap play. Rune, Thorchain. So Thorchain, if you look at Thorchain and its history, Thorchain is um, a protocol that moves very closely with Bitcoin because its use case is based completely around Bitcoin. It allows you to get yields off of Bitcoin, do several other things with Bitcoin. So you'll see it move with Bitcoin pretty closely, but at a much higher clip. So as an addition to getting a higher upside ratio, adding Thorchain to your, a bag of Thorchain to your mid caps is a good idea. And then we have Engine. If you believe in the development of NFTs, specifically in gaming and social media networks and ownership of items in the metaverse, then you need to believe in Engine. Engine allows that to be possible for many protocols. They're integrated with a lot of different protocols. Gaming in the as far as blockchain is concerned is a big area of growth I see in the future, and Engine could be a very big player in that space. Gatla. So Gatla is what we would call probably the largest game developer in the space currently. And once again, if you believe in the future of crypto gaming, Gatla Games is a powerhouse and could be a much larger powerhouse in the future. They are integrating games and even bringing some of their more recent games. They have plans to bring them into the Web 2 sphere and try to make a bridge basically for new users. So definitely a very good addition to a mid cap portfolio. Audio, which is for Audius. So we're when we talk about innovations in the space, potential innovations in the space, a lot of people will talk about music NFTs, and I'm of the same mind as a lot of those people. I think that music is going to be a big part of blockchain technology. It's going to help a lot of smaller to mid-level creators and help them create careers in music where before it would have been impossible. Audius is a leader in that field. So if you believe in that particular movement in blockchain technology, then you should believe in Audius, and that could potentially be a mid cap for you. So my last in the mid cap area would be OP, ticker symbol, which would be Optimism. Optimism is a scaling solution for Ethereum. They just recently had their token drop. Optimism is if you use Optimism, the difference between using Optimism on Ethereum-based protocols to using Ethereum is massive because of the gas fees. So the ability to do transactions and to pay a tenth of what it would cost on Ethereum is a big thing. And we've seen a big migration to Optimism. So I think all layer twos actually. I also think that Arbitrum, if they decide to drop a token, will be a great mid cap to invest in the coming years. All right, so now let's get down to the dirty stuff. So we're talking about, I did not put a seventh in here, so we'll only put six. It's very difficult to pick small cap alts. So small cap alts are these are your moonshots. These are best guesses. These are ones that you can see 50, 100 X's in, and sometimes you will and sometimes you won't. This is the major risk factor in your portfolio. So, but I'm going to give you some that I see that could potentially be there. So Alluvium is right on the very verge of being a mid cap, but it's not quite. So Alluvium is it's a blockchain game that is one of the first blockchain games to kind of bridge into the actual 4-star gaming, look and feel. Most blockchain games up until AAVE and Star Terra and a few of others were based around, very pixelated or rudimentary gaming technology. AAVE is really looking to be a powerhouse game and a game that could appeal to the overall masses. So AAVE would be one of my um, picks for small caps. Next would be PYR, which is Vulcan Forge. Once again, basically a gaming syndicate or a gaming development studio. This is just basically the same thing as Gatlic Games on a smaller scale, so a higher potential upside. It is of course, a gamble onto, which ones of these companies will be still moving forward after we get to this bear period. Another one of mine would be Trader Joe's. Trader Joe is the main DEX on the Avalanche blockchain ecosystem. I picked Trader Joe's because, number one, it has a very smooth interface. It potentially could be the number one DEX on the Avalanche ecosystem. And if Avalanche grows in a way that I think that it will, Trader Joe's will grow at a larger clip than Avalanche itself. So very good potential there. And I think a good addition to your small caps. MOVR, which is Moon River. Moon River is a play into Polkadot. I am not a huge Polkadot fan myself, but I do see the potential in Polkadot, and I do believe that if Polkadot moves in a positive direction, that protocols like Moon River on Polkadot will see 3 and 4x the movement of Polkadot. So I think it's a decent play. S Fund, which is Seedify. Seedify is a fund that basically acts as a launch pad for projects. You can get into it. Seedify, it not only is it potentially a good investment, but it can allow you to be an investor in other projects that are launched through them. And so it's good to have a launch pad or two in your portfolio to allow you those moonshots potentials. So I think Seedify is as good as any to get into in that frame. And then you'll see again here UFO Games, another gaming studio, which is I think is the lowest market cap of any of the other ones on here. So it's a very big moonshot, but it is potentially could be the biggest gainer in your portfolio if the studio itself. So these type of things you really want to look into. The reason why I put UFO Games on there is I've used their products. I think they're cool. I think they're innovative and they have room to grow. So that put them on my radar here. So there you go, guys. You can screenshot that if you want to. There's a few of these. Once again, not financial advice, but I just wanted to let you guys see some of my thoughts and insights into what potentially you could build your portfolios around. Okay. So final thoughts today for portfolio building. Portfolio building is unique to you. So take the information that I've given you today, use that to create. And the biggest portion is you do not have to be 100% correct. You do not have to do this all 100% correctly, but you do need to be working towards building something that is set in stone, that is on paper, so that you do not so that you're not caught up in the FOMO and the hype and the FUD, all these different emotional things that go on in crypto. It's very important that you understand at the emotional aspects of crypto and that you have a plan that will get you through those things. So once again today, guys, I know we had a little bit of a shorter episode. We had quite a long episode last week, so I wanted to shorten it down a little bit this week. We should have some very interesting guests in the next coming weeks, and we'll have another market review to see how things are doing here in a couple weeks. But until then, thank you guys for being on here. I hope you got some value out of this. Once again, if you would like to go watch some of our other videos, we have several. The last couple weeks have been really great. You guys can just look on the channel on Web3 Weekly. Check it out. If you guys are interested in developing a portfolio, or you're interested in the art on our projects here, or if you're interested in using tools to help you make short and long-term trades in the space and not have to pay a bunch of money for them, please drop down, get on our Twitter, Alpha Mutants. Twitter and Alpha Mutants Discord. Come in, talk to us, and get some knowledge. We'll all grow together. We'll build things together. We'll get through this bear market and we'll make a lot of money during the upturn, and we'll see a lot of development in the space. So once again, guys, thank you, and we'll see you next time.